Boy, have I got some news to tell you guys. The FTSE 100 has followed its big bro, Mr. Wall Street, and has fallen significantly. Apparently, the points haven't been this bad since 2011. That's like 7 years. So it's looking quite bad, guys. I'm definitely going to let you guys know my thoughts on this. Keep watching. Hi guys, it's your favourite YouTuber again, Dami Solaru, and you're watching DS Learning Finance. Whoa! The news is saying that it's the US technology sector and the trade war worries that are in particular causing this downward spiral of the US market and hence the FTSE 100. And apparently it's due to that guy that is on everyone's mind right now. Some for good reasons, most for bad reasons. Mr. Donald Trump. Yeah, he's caused another issue again, guys. Apparently he put some tariffs on that Chinese aluminium and steel market. So what's happening is you have China, Beijing in particular, that's clapped back. And so the way that they've clapped back is by basically affecting their imports. So they import a lot of things into the US market. One of which that they've severely affected is the pork imports that they bring in, and also apples. Yeah, go figure. I've looked at the stock market very recently, like yesterday, and with more negative and red numbers than a digital alarm clock. Yeah, it's not a shocker that some investors, they are frantically panicking right now, to be honest. The only small itsy bitsy ray of hope for the FTSE 100 is that it's not doing as badly as the global markets, as other global markets like the US market and so on. It's not doing as badly as them, but it's still doing badly. Yeah, don't be fooled, because even though it's barely hanging on to the 7,000 mark, that used to be its support, and now it's barely hanging on to it. So it's just amazing like how quickly things can change. Just 3 months ago, the FTSE 100 was looking like it was about to break that cursed limited 8,000 cap. It looked like it was about to go even higher than that. And within the first quarter of this year, it's looking quite bad. It hasn't been this bad for 7 years now. It's events like this that really just make you think about how you can't let your emotions get the best of you, and also what I love to say, you need to, that's right, diversify your investments. But let's talk about the emotions first. So what you have a lot of investors doing right now is panicking. A lot of people are losing their hair, running around like a headless chicken, just panicking. And what you just have to remember is that this is just a phase. There will be a lot of fear, there will be a lot of laziness. Fear because you will have investors that will be frantically scared of losing even more money, and laziness because most investors, they just see, oh, the price has gone down, the FTSE is down by 1,000 points, I've got to get my money out. But really, do they actually understand what's going on? Do they actually understand the reasons behind why the FTSE's gone down? And if they did understand that fully, then they would behave differently, if you get what I'm trying to say. Markets can change like that. And as you have a lot of investors frantically running for the exit door, in my opinion, this is an awesome time to invest. I personally know some people that have been dying, begging to enter the FTSE 100. And guess what? Now's the perfect time for them to do that and to buy shares in the FTSE 100 for dirt cheap bargains, guys. So really and truly, now's the best time for those type of investors to swiftly catch some bargains and basically make money from other people's emotional state. And from the diversification perspective, you can see that diversifying your stocks is important for events like this. Imagine if you had all of your stocks invested in FTSE 100 companies. So imagine if you had 20 grand invested in FTSE 100 companies. Guess what? All of your money would be down right now, this very second. And this is why I ramp on about diversifying your stocks, because diversifying your stocks is a form of risk management. If you have a stock in a different market, it might be something completely different, something that's not affected. Because believe it or not, there are some stocks that aren't affected. There are some markets that aren't affected. If you invested in one of those markets, half your money there, as opposed to all of it in the FTSE 100, i.e. diversifying your portfolio, it allows you to stay afloat. It allows you to sort of manage your risk. And that's why I always talk about diversifying. So you've got to really look at your investments and find out if your investments actually strongly correlate, and if so, what can you do to improve that situation, so that one day if one stock goes down, you don't have to worry about the other stocks that you've invested in, because you know you've got a diversified portfolio. I just felt like I should talk about this piece of news because I found it pretty interesting. Just one man can change a complete chain of markets, just one man. And yes, be it he is the most powerful man in the world, but it doesn't just have to be him. It could be other people, it could be a group of people, it can be a country, it can be a collection of countries. Whatever it is, just one thing, one small little thought, one small little action can change the market completely, flip you on your head. We're talking like Beat Boy style, like. And as much as I say you need to research, you need to study, I want you guys to know that a part of investing is based on understanding the human psychology. If you think about it, the stock market is not a bunch of computers locked up in a computer room. It's not elite geeks that just haven't seen the day of light and they're just focused on studying all the mathematical formulas and statistics behind all of the stock market. It's not about that. The stock market is me, it's you, it's the person next to you, and it's the person next to your person next. Yeah, you get it. The stock market is us. We are the stock market. So whatever the general consensus is with us, or with our thoughts to a certain piece of information, then if you're really good, you can be able to predict and react to other people's psychology, other people's actions, and what you suspect they're going to do. So understanding what most people would do in certain situations can be so valuable for an investor, because it makes you able to predict and react in the best possible way to a certain scenario, i.e. this one. Check out my channel because I've got loads more information. But before you can leave, you know what to do. Like, subscribe and share. LSS. There's more coming, you know it. DS Learning Finance. Whoa. Bye guys.